Let's bring in Crossmark Global Investment CEO and CIO Bob Dahl. Bob, happy Friday. Good to see you.
Same to you.
I know you argue that there's little evidence the economy is weakening, but that there is pressure on the central bank to ease. Explain how both can be true.
Well, I do think there's evidence the economy is weakening. The employment reports have been weakening. Inventories are building. We're seeing delinquencies move up. Credit card usage is moving up. They're all signs that we're starting to live on borrowed time. So I do think the Fed will get started, as you all have suggested, probably 25 in September, with a hint that there are more coming.
And Steve, do you think that gets telegraphed pretty plainly next week?
Yeah, I mean, I think on a top-line basis, that's right. I'm really interested, though, in this idea of risk management, which is one way that the Fed can run monetary policy, Carl. This idea that, look, we don't know if the economy's weak right now or weakening. It's okay here at 2.4% for the third quarter with a 1% retail sales number. But we may want to put ourselves in a position to address that weakness if it should come up. And the thing that's going to be on my mind next week is, how far do you think you are from neutral? How much can you give and still be restrictive, putting downward pressure on inflation that still remains, and yet be in a position to pretty easily provide stimulus for the economy if it turns out to be needed?
Bob, we obviously had this growth scare combined with some other sort of volatility catalysts in terms of positioning and all the rest of it, but still up pretty appreciably at the headline indexes for the year. Where do you think we sit here in terms of expected returns, in terms of whether earnings are going to be coming through to justify where we got to near the all-time highs?
Mike, a lot of cross currents, as you know. I agree with Steve that the Fed wants to signal there's more to come. I mean, think about the absolute number. They're over 5%. There are not many nominal data points that are at 5%. So they're restrictive in what they're trying to do here. In terms of the market, it's digested an incredible amount. You covered beginning of the last hour how the yen carry trade is pretty much behind us. There's a lot of evidence that quantitative and systematic managers are buying. Corporate buybacks have picked up. Earnings were good in the second quarter, but on the other hand, third quarter estimates at the margin have been cut some. So a lot of cross currents. In the meantime, you got to pay 23 times earnings for the S&P 500. Things better be really good at 23 times.